Hi everyone, in this video we will be talking about how to analyze business transactions. But before that, we will be having first the definitions of accounting. So there are three known definitions of accounting. We have here the first one, the definition given by the ASC or the Accounting Standards Council, and it says that accounting is a service activity. Its function is to provide quantitative information, primarily financial in nature, about economic entities that is intended to be useful in making economic decisions. Another definition is given by the AAA or American Accounting Association, and it says that accounting is the process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by users of the information. We also have this one, the definition given by the ICPA or the American Institute of Certified Public Accountants. So this is the widely used or the widely accepted definition of accounting, and it says that accounting is an art of recording, classifying, summarizing in a significant manner, and in terms of money, transactions and events which are in part at least of a financial character, and interpreting the results thereof. So this definition mentions the four phases of accounting: the recording, classifying, summarizing, and interpreting. Recording actually refers to journalizing. So this is all about writing down the business transactions and events in a chronological manner. So when we say chronological manner, the business transactions are recorded in the order of occurrence. So for example, we have here the first transaction occurring on August 1, 2021. So it should be followed by the next transaction occurring on, let's say, for example, August 15, 2021. And then it will be followed by, let's say, August 31, 2021, and then September 1, 2021. So it should be in chronological manner. Dapat the business transactions are recorded in the order of occurrence. Take note that before transactions and events could be recorded, the source document should be first identified, analyzed, and measured. By identifying, we have to determine whether a transaction is accountable or not, because as a rule, only those accountable transactions are going to be recognized or recorded. So, question now is, what are accountable transactions? The accountable transactions are those that affect the accounting elements or the accounting values, which are the assets, the liabilities, and the equity of the business entity. Needless to say, transactions that do not affect the assets, the liabilities, and equity, or the non-accountable transactions, shall not be recorded. For example, the hiring of employees, the death of the company president. So these activities are not quantifiable or not measurable, and therefore should not be recorded. In analyzing, the transaction should have a dual effect, which means there must be a value received or debit and a value parted with, which is also called as credit. In measuring, the transaction should be quantifiable or measurable, meaning to say, the monetary value involved in the transaction is determinable. The second phase in accounting, as mentioned in the definition of accounting given by the ICPA, is classifying. So this actually refers to posting. So this is wherein the entries in the journal are transferred to the ledger. The third phase in accounting is summarizing. So this involves the preparation of financial statements and other accounting requirements, like the preparation of the trial balance, the adjusting entries, the post-closing trial balance, and the reversing entries. The fourth phase in accounting is interpreting. So this is all about analyzing, interpreting, and communicating the financial statements to the interested parties. So we will be talking about these four phases again as we go on to the discussion of the accounting cycle. But meanwhile, we will go back to the question, how to analyze business transactions. So there are actually two secrets in order to correctly analyze the business transactions. And first of that is to analyze every transaction at the viewpoint of the business. So this means to say that if the transaction says purchase the car for 350,000, this means that it is the business that is buying the car. If the transaction says sold 1 unit air conditioner for 15,000 pesos, this means that it is the business that is selling the air conditioner unit. If the transaction says collected 15,000 pesos from a customer, this means that it is the business that is collecting the 15,000. If the transaction says paid salaries to employees, this means that it is the business that is paying the salaries to employees. Secret in order to correctly analyze a business transaction is to always consider yourself as the business. So you have to think that you are the business. You have to think that ikaw yung business. So when analyzing for the debit and credit, you simply have to ask yourself, what do I receive? So this is now the debit. So take note also that you should always determine first the debit or the value received before determining the credit. So after asking yourself, what do I receive? You will then ask yourself, what do I parted with, or what do I give up to get the debit? So this is now the credit. So let's now have these illustrations, and we have here the first one. Purchase a delivery van for cash, 700,000 pesos. So as what I told you earlier, in order to correctly analyze a business transaction, you have to analyze it at the viewpoint of the business. So in this transaction, purchase a delivery van for cash, 700,000. So this means that it is the business that is buying the delivery van. So this is now the identifying. Now, another secret in order to correctly analyze a business transaction is to always consider yourself as the business. So you have to think that you are the business. You have to think na ikaw yung business. So we will now ask ourselves, what do I receive, or what do we received? So it's the delivery van. And now, what do I parted with, or what do we parted with? What do we give up in order to get the delivery van? That is the cash. So this is now the analyzing. And next, what is the peso equivalent of the exchange? That is the 700,000 pesos. So we then say, debit delivery van, 700,000 pesos, and credit cash, 700,000 pesos. So this is now the journalizing. Okay, for the second illustration, we have sold a delivery van for cash, 500,000 pesos. So this means that it is the business that is selling a delivery van. So this is identifying. So next, so again, when analyzing a business transaction, we need to consider yourself, or we need to consider ourselves as the business. So we have to think that we are the business. We have to think, or you have to think that you are the business. So for the debit, what do I received, or what do we receive? It's the cash. Next, what do we parted with, or what do we give up in order to get the cash? That is the delivery van. So this is analyzing. So how much, or what is the peso equivalent of the exchange? That is 500,000 pesos. So this is now the measuring. So we then say debit cash 500,000, and then credit delivery van of 500,000. So this is the journalizing. If you guys notice in the entries, in the journalizing, the amount of debit is equal to the amount of credit. Let's say for example, in this journalizing, we have the debit of cash 500,000, and we also have a credit of delivery van of 500,000. So this actually refers to the theory of debit and credit, and we will be discussing more on this in a separate video. Meanwhile, I have to say goodbye, and I hope you guys learned something out from this video.